All right, hello traders, and welcome. It is Monday, 9/16/2024. So moving halfway through the month of September now, feeling great with our accounts and what's going on. So we're going to take a look at both the standard trading account. We're going to look at the lazy trader account today. I'm going to show you what's going on in both of those. Give you a little bit of my take on the Fed moves for this week, and then also we'll show you what we're trading right now. So what trades we got on, what trades we've added today, what we just took off, closed a couple more winners. So loving where we are, loving the new setups that we've got going on, and really positioned, I think, very, very well for the next steps of what we're going to be doing. All right, so let's actually jump into it and take a look at, and I'll get off the video here for you. But let's take a look at the accounts and see what's going on. First, in the markets, you can see just a big V move here on the S&P E-minis. We're right back up to this downtrend line. MACD rising, RSI has been rising, both the daily and the weekly. So this thing is buzzing along nicely. We're above the 21, which is above the 50 on both. We're above the anchor weighted VWAP here as well, that we bounced off of a week or so ago twice and then rocketed higher. So overall, things look pretty good heading into the FOMC meeting this week. The big thing for the FOMC is going to be, are we going to raise 50? Are we going to cut 50 or cut 25? We'll see. We'll take a look at the Fed Watch tool and see where things shape up on that. All right, let's take a look at oil. Now, oil's been an interesting case. This thing had been selling off for weeks and months on end here, and then finally, great little doji candle here, starting to reverse higher this week. It's a 1 day, so not too excited about it, but it already had started last week moving higher on this move, and got MACD reversing, moving higher. You got RSI moving higher on the daily and the weekly. Not sold yet on the weekly, but we entered some new trades on this. We've got a lot of overhead resistance here that we're going to have to break through. So there's a lot of work to be done on oil, but so far, so good. Don't know that this is a bottom that's in, but we'll take what we get. All right, let's take a look at gold futures. Just breaking out of this consolidation here. You can see gold moving itself to the upside. Nice breakout. Not great volume, though, on this breakout, but a good breakout nonetheless. Uptrend line here. So we are moving higher on gold. MACD is rising, RSI is rising, both the daily and the weekly. However, we are overbought, but we can stay overbought, and this thing just continues to move its way higher overall. So like where we are on gold, things look pretty good on gold. All right, so bonds wise, this is where, I think we're really looking to see what's going to happen this week. But overall, bonds have been in just a nice uptrend, plateaued here, little sideways consolidation action, moved their ways higher, broke back out. So bonds, great looking chart on bonds here. Right now, we're looking at the 30-year. We could also take a quick look at the 10-year note. Both of these breaking out of consolidation, moving higher, like where we are on bonds. Here overall, we're out of contango on these things, or really out of the inversion, I should say, and moving higher overall. So that's in pretty good shape here as well. And then if we take a look at TLT at the 20-year, again, same thing. Bonds are just plowing their way higher. Now, do the bonds have everything already priced in? So are bonds pricing in the Fed move? Now, up until really today and a couple, over the last week or so, we've really been looking at a 25 basis point cut. That's still where I'm hanging my hat. However, the odds of that cut have moved down significantly, and we're now at a 67% chance of the Fed moving here into a 50 basis point cut. So right now for the September meeting, we're looking now at 67% of a 50% cut. I still don't know that I'm buying it. I'm still really in the camp of a 50 point or I'm sorry, a 25-point cut. But the markets seem to think we're going to go 50 and the Fed's going to go big. Either way, it's the start of the Fed cutting cycle. And I think as the Fed cuts, you can see that bonds should continue to at least move sideways to higher overall. So I do like where bonds are. I think if you take a quick look, at bonds and you go back a ways, I mean, we've been so much higher, and bonds are still only just off of their lows. I mean, this was a giant sell-off in history here for bonds. So if you take a look at the bond futures, moving from about this 180 level all the way down to really the 100 level, and then starting to move their way higher from here. So in reality, this move hasn't even really begun yet. We could probably take this back here. This move really hasn't gotten its legs under it. I mean, look how high we were and look how far we fell. Now, do I think the Fed's going to get all the way back to where it was in 2020? I don't know that that's the case. However, okay, I certainly think we're going to recover more of that. So I am very bullish on bonds. So I think the bonds are the play. There's a number of ways to play it. You can be playing the futures, which is typically what I'm doing. You can also be in TLT, which is what we're also doing. So we've got not only leap calls, but we've got leap puts in TLT. We're also trading TMF, which is the 3X version of the 20-year, and this thing is just cranking its way. Now, again, look where this thing was before. Let's see if we can even fit it on the screen. I mean, you're talking something way up here, 504, 520, 480, 500, all the way down here into the 60s, and now starting to recover. So, do I think this is done yet? No, I think we're just getting started. Excuse me. So I think TMF, another great way to play it. You can also look at UTWO, and that's the 2-year note. Is there a way to play it here? This thing's also been moving higher. Okay, but in the scheme of things, while this looks like a gigantic move to the upside, I mean, again, we're down half of where we maybe were. So we're just getting started, I think, on the bond move, which is going to be triggered by the Fed rate cut here. How much of this is already built in to these ETFs? Hard to say, but I'm still in the camp that we continue to move higher on bonds. I don't think it's all built in. I think there's a good amount of upside to go. Is it 20? Is it 30%? What's the upside that's left in this? But we're definitely long bonds. We added some more bond trades today. So I think, as we look at again, this TLT, UTWO, the 2-year, I think these moves are just getting started, right? So Fed rate, is it 50? Is it 25? Does it matter? I don't know that the markets are going to love the 50. It depends really what's going to be the wording along with that. However, I think either way, bonds are going to benefit. The markets might sell off a bit on the 50, okay? But I'm starting to lighten up on my market positions a bit, and I think we'll probably close a 111 or 112 ahead of time. But I like where we are in here. So we're playing these definitely to the upside. We're also playing silver on this breakout of this flag pattern to the upside. We're playing copper here on this breakout of this descending wedge sideways and up. I mean, I think copper looks really, really nice here, breaking above the 50, 21 moving up to the 50, RSI, MACD all rising on the daily. I like the way copper is. We actually closed a copper winning trade today and put a new trade back on. And if we take a look at the Aussie dollar, this thing just continues to move sideways. A little bit of an uptrend right now, which is all good. So it's got some positive momentum back into it, but plenty of resistance here at the Bollinger Band and the 3 ATR up ahead. So we won't get too excited about that. But right now, well, we're in good shape. We've got two strangles on. One's at 36%. One's down just a couple $100. So we're in great shape as far as that goes. All right, let's take a quick look at the accounts. We'll jump back in. So today we ended the day 341 on a delta, which is 0.1%. So pretty delta neutral. Theta 978, which is 0.27. So we're in pretty good shape with theta. Would always like more. We moved up to 357, 269. So we are at one of the highest points that we have been at since the sell-off back in the beginning of August. So this is now the highest mark we've been at. We have recovered a good chunk of this from the net lick side because we didn't close all of our pieces, but obviously we did take a bunch of realized losses. That's going to take some time to build back in. But last week was a great week, up 46.99 on the week last week, and we're up and running today with $1,140 to the good. Let's take a quick look at how things have been going. So ended the week last week on Friday with a pretty good little call spread on the 12th. And then, well, I should say Thursday. And then today we closed, I said, that copper put spread. We also closed an oil put debit spread of a 112 for a $440 winner. We still have the nakeds running. So we've got the naked puts on oil that are positive, and then we closed the put debit spread for a win as well. So like where we are on that account, I'm moving up. Highest position we've had since the August 5th selling started. So I really like the positions that we have in. We're sitting at a pretty good Vega. I think we're in really great shape with hedges. I think we're ready for the Fed meeting. If we move down, I think that'll be fine. And we've got trades in bonds. We've got trades in copper, silver. We've got trades in gold. We've got trades on the ES. We've got trades in oil. We're long SVOL. We're long TLT. We've got MicroStrategy in there for a little bit of a Bitcoin component, which is up as well. So I like where we are sitting on this, and we just keep booking trades. On the lazy trader account, we are just a couple grand off of an all-time high. So this account is sitting within a little over about $3,000 away from a new all-time high. We've had days where we've gone up 3,000 or 4,000. So we could hit that tomorrow with a decent day in this account. So the lazy trader account, okay, not sitting at a recent high, mind you, we're looking at the all-time high in this account. So this account sitting at, really near an all-time high in there. Had a good week last week, booked $1,900, almost $2,000 in there. So had a nice week last week, moving higher. And I'm expecting some good things this week as well. So what's in the lazy trader account? We're sitting here on ARM, so ARM. We're sitting there on a put credit spread. That thing's up 30%. We've got 90% of this account in build, generating money. We are in Constellation Energy with put leaps. Those are up 50% in 10 days. We're in CleanSpark PMC. We've got an IWM poor man's covered call. We've got a MicroStrategy poor man's covered call and a leap put. We've got NVIDIA naked puts in here. So we've got NVIDIA leap puts. Well, they're not, I shouldn't say they're not leaps, they're short term. We've got NVIDIA puts in here. Those are up 6%. We've got SoundHound as well, poor man's covered call. We've got our SPY leap put strategy, which is up right now. We added another tranche of that today. We're sitting on TLT in our free leap call spread. We've also got a leap put in TLT. We've got TMF shares. Those are up. And then we've got XLE as a poor man's covered call. So a lot of things going on in the lazy trader account. I like where we are on that particular account. All right, so where do we go from here? What's going to happen? In there, I shared some of the some of the account with you. I've shared some of the bond ideas. Does the Fed cut 50? Does the Fed cut only 25? We'll see. We are positioned either way. I think what we'll do is we're going to probably lighten up on one of our 1-1x bull trap or bear trap trades. So we'll probably lighten up on that just to reduce a little bit of risk. We've got great amount of buying power. So if the Fed does cut 50 and are a little hawkish or anything, and the market starts to sell, it's all good. We'll see what happens. If we drop down, we've got a lot of hedges. We've got a lot of put debit spreads on. So we're just sitting there waiting for this market to kind of sell itself sideways. In the meantime, we're long TLT, we're long TMF, and we're long bonds, overall bond futures. So I'm excited about where we are. Looking forward to a great week this week. Fantastic week last week in both the Lazy Trader and the trading account. Up almost $7,000 combined in those, up another $1,100 today. We're fighting our way back. We're cranking it up, and we're excited to be bringing this stuff to you. You can follow along with what I'm doing. I'm giving you insights to what I'm trading. If you like it, great. Hit the like button down below. Subscribe if you're not a subscriber. Get some trade ideas. Find out things you don't want to do. Find out things you do want to do. But I'm going to keep it honest with you. I'm going to show you the wins. I also showed you all the losses out there. We have not put a dime into any of these accounts. Okay, so there's been no money put into the main trading account since the $30,000 earlier in the year. It's nothing since August on the Volmageddon day. It's all just recovering on the net lick, and it's all just generating more income through trades. That's what we're going to do. We're going to keep cranking it out. We're going to make some great money between now and the end of the year, and excited for what we head into next year, even if we start to head into a recession. All right, we'll see you guys later. Have a great rest of your evening. Bye-bye.